myself Trisha and Manasa. We are going to talk about the cash flow statement in phase 1. Um, a cash flow statement is actually a financial statement that summarizes the amount of cash and cash equivalents entering and leaving a company. The cash flow statement measures how well a company manages its cash position, meaning how well the company generates cash. The CFS also complements the balance sheet and the income statement. Now I'm going to explain a sum that's based on the cash flow statement, and in the sum, uh, we should prepare the cash flow statement with the given balance sheet of Liva Limited as of 31/3/2013 and 31/3/2012. The particulars, in the particulars column, the equity, and there is equity and liabilities. In that, the first comes the shareholders fund. In the shareholders fund, uh, the share capital and the reserves and surplus are amounted. The share capital is 2,10,000 as on 31/3/2013 and 1,80,000 as on 31/3/2012, and the reserves and surplus is 1,32,000 and 24,000 respectively. And the second comes the non-current liabilities. In that non-current liabilities, the long-term borrowings comes, and the amount is 1,50,000 as on 31/3/2013 and 1,50,000 on 31/3/2012. And next comes the current liabilities. In that, first one is the trade payables, that is 75,000 and 27,000 respectively, and the totals are 5,60,000 and 3,81,000 respectively. Then comes the assets. In the asset side, the non-current assets and the current assets are represented. In non-current assets, the fixed assets are of 2,94,000 and 2,52,000, and the non-current investment is 40,000 and 18,000 respectively. And comes the current assets. In the current assets, the investment investment is shown. That's 54,000 as on 31/3/2013 and 60,000 as on 31/3/2012. Then comes the inventories. Inventories amounts to 1,07,000 and 24,000 respectively. The trade receivables are 40,000 and 17,500 respectively, and the cash and cash equivalents, which amounts to 24,000 and 9,500, and the total of the balance sheet is 5,67,000 and 3,81,000 respectively. Then comes the notes to accounts. The notes to accounts, the reserves and surplus are noted in the notes. As on 2013, the reserves and surplus is 1,32,000 and 24,000 respectively. The surplus is the balance in the surplus states the balance in the statement of profit and loss. We are going to deal with the cash flow statement for the year ended 31 March 2013. Now first comes the cash flow from the operating activities. Cash flow from the operating activities indicates the amount of money that a company brings in from its ongoing regular business activities. So the flow of money in the business is known as the cash flow from operating activities. Then comes the profit before taxation. Profit before taxation is a measure that looks like a company's profit before the company has to pay any corporate income tax, and it essentially amounts to the company's profits without consideration of any taxes. So 1,08,000 is the cash flow from the operating activities, and profit before taxation is also that. Then then comes the adjustment, which is we have to be decreasing the increase in current assets, the trade receivables and inventories. So 22,500 is decreased, and the adding of the increase in current liabilities and trade payables, which is 83,000. So the total comes of 1,05,500. Then comes the net cash flow from operating activities. So cash flow from operating activities is 50,500. The total is 50,500. Then comes the cash flow from investing activities. The cash flow from Investing activities is a section of cash flow statement that shows the cash generated or cash spent, including the purchases of physical assets, investments in securities, on the sale of securities or assets. That indicates the cash flow from investing activities. Okay, from in the cash flow of investing activities, two items are added, which is the purchase of fixed assets, which is 40,000, and purchase of investments, which is 30,000, which is added together as 70,000. Then the net cash used in investing activities is 70,000 in total. Next comes the cash flow from financing activities. The cash flow from financing activities is a section of a company's cash flow statement which shows the net flows of cash that is being used to fund the company. The financing activities include transactions involving debt, equity, and dividends, respectively. So, the proceeds from issue of share capital is added in the cash flow from financing activities, which is 30,000. Then the net flow from the financing activities is 30,000 respectively. Then comes the the next column, which is net increase or decrease in cash and cash equivalents, which is 8,500 in total. So the cash and cash equivalents in the beginning of the period, that is marketable securities and cash equivalents, are added together, and the amount is 69,500. So the cash and cash equivalents of the end of the period is 78,000 respectively. So the company's cash flow statement from the operating activities, the cash flow from investing activities, and cash flow from financing activities, and the net increase in cash, decrease in cash and cash equivalents, are in total of 78,000 respectively. We have to add the current investments and the cash and cash equivalents. The current investments and cash equivalents are 8,500. Then we have to add the cash and cash equivalents in the beginning of the period, which comes under the marketable securities, and cash equivalents are added together, which is 60,000 of marketable securities and 9,500 of cash and cash equivalents. So the total comes of 69,500, and the balance and the total amount is 78,800 respectively for the firm. This is the cash flow of a firm respectively.